Hello, ladies and gentlemen. Good to see you here, and welcome to the Banking Summit of Business Today. I'm Udayan Mukherjee, and I'm very happy to have with me one of the smartest bankers in India today, Amitabh Chaudhry of Axis Bank, who has effected a remarkable turnaround in Axis Bank's fortune since he joined a few years ago. And it seems apt to start off this conclave with him by asking him what the picture for banking is looking like for the next couple of years. Amitabh, it's wonderful to have you with us today, and thank you for finding the time.
Well, thank you so much, Udayan. Really appreciate the fact that you invited me to this forum. Yes, when we talk about banking as we stand today, everyone is saying this is the decade, perhaps the best decade ahead for Indian banking, given a lot of factors which are coming to play. Banks' balance sheet, are well capitalized. They've written off most of the losses. The corporate India has also cleaned up its act. Indian economy seems to be the sign of, or representing one of the few economies in the world which is growing. Geopolitical situation seems to be favoring India and all of that. So from that perspective, and the credit growth is also seem to be doing quite well. From that perspective, I think a lot of factors seem to be speaking to this decade ahead where we could be marching forward at a rapid pace. Being a banker, you also need to look at the risks all the time. In my mind, we need to add a dose of caution to this feeling of euphoria. And the feeling of caution comes from a couple of factors. One, while we have cleaned up our act in this desire and this aspiration to grow, all of us have to realize that today we might be making mistakes which could create not a new banking crisis, but create problems for banking going forward in the future. So we have to be very careful about what decisions we are taking today, because they will play out 5 to 7 years down the line. Secondly, there are three, I would say, things which still worry me from a macro perspective. One is that I believe while inflation is coming under control, and there is a report which I saw just a couple of days back which talked about how India might start reducing interest rates. But I would say that given what is happening around in the world, inflation could remain sticky for some time. And one of the factors which is, for example, feeding into this is that China has opened up and China will start growing at a pace all over again. They have something to prove to the world. And, for example, commodity prices could start rising again. Second is, obviously, this looks like the Russia-Ukraine war is entered into an impasse. You don't know what the end game is. You don't know how long it will take. And while it is not impacting India, it is impacting things globally. It does cause people to pause, because when something happens or something flares up, people do kind of pause and say, okay, should I invest? Should I not invest? Things could go haywire. And obviously, last factor is China and what China could be doing from a geopolitical perspective. They have ambitions. They have openly stated ambitions about what they want to do. They don't no longer see themselves as one of the superpowers. They want to be treated as one. They want to be recognized as one, and in that process, they could do things which could again upset the apple cart. They are doing things which seem to upset the apple cart regularly. So, dose of caution, but I think yes, the next at least 5 to 7 years look very, very positive for India. And I will just add one last thing. India has had these moments before. We seem to excel in somehow making a great dish go bad, because our execution is poor or somewhere we go off track. I hope this time we don't.
You're being polite. You mean to say that we shoot ourselves in the foot?
We tend to. History shows that we are very good at it. Everything will be aligned in our favor, but we'll go and do something which puts investors off, puts people off, pushes investments out, takes the narrative from what we should be focused on to somewhere else. And I think while the present government has done a great job in sticking to the knitting, we have to ensure that come elections or come some factors, we don't go off that path. And if we go off that path, we'll again miss a great opportunity for us.
Through the last 5-7 years, bankers like you have been very conservative because you were cleaning up the mess of the previous cycle. Now that you're saying that is pretty much done, from a management perspective, are you realigning yourself to become super aggressive once again to play a new credit cycle?
So if we were to say that the macro is a bit volatile and macro is a bit uncertain, and by the way, uncertainty is only increased over a period of time, the way I describe it is that we should all behave like a crouching tiger. We should grab every opportunity which comes our way, and there are enough opportunities which will come our way. But at the same time, we should be willing to crouch if things are, become too volatile or it's difficult to define how it will play out. So in that sense, yes, we, as in, for example, in Axis Bank, we have launched a strategy which is called GPS. We are very clear in that strategy that we want to go in market share. We want to become number one, number two in some of our defined businesses. We have taken a very clear stand that we want to create 2 areas of distinctiveness and we'll put disproportionate dollars there. So at a foundation layer, we are continuing to invest in some things we believe in, which will allow us to go from, let's say one step in the ladder to a different step in the ladder. But at the same time, we are very cognizant of the fact that we need to crouch if things were to go bad because things are volatile. So you use the word super aggressive. I think no regulator will like that word, super aggressive, because they'll get really worried. But yes, you can be smart about how you can capitalize on opportunities which present before yourself by investing in technology, looking at, next 5 to 7 years, by investing in the right people, by investing and looking at where some of the other competitors are not paying too much of attention, or where you can play and become distinctive over a period of time. So I think that's what we are doing. It is a long play. You can't do this in the short term. But if you keep doing things the right way, you have a long-term vision, I think you can get there over a period of time. And I think some of the things which we have done, where we have gained market share or what we're doing with the Citibank acquisition is, I think, very much speaking to that strategy which we outlined a couple of years back.
You said crouching tiger. I mean, that phrase comes from a film called Crouching Tiger, Hidden Dragon. So the cycle hopefully will not end with a lot of hidden dragons in your balance sheet, right?
That we have cleaned up. So we have taken those 2 words off. We just focused on the crouching tiger part. We have done a lot of hard work in ensuring that we completely redefine how we look at our business. And most importantly, what we will not do rather than what we will do. Become conservative in terms of not only our risk guardrails, but just conservative in terms of everything we do. Our accounting policies, how we present ourselves in the marketplace. But that does not mean, given the size of our market we have in deposits, we are below 5%, in advances we are 5.8%, we have a long runway ahead of us. So, I can be conservative, I can be smart, and I can still grow at industry-beating growth rates without doing any stupid things. So why should we not do that rather than just say, oh, this is a opportunity here, let's just go and grab it at whatever the cost might be. So we are just trying to say that we have done a lot of hard work to get where we are. It has cost us a lot. Let's not let that go ever in our future. So it's not just about me saying it, but what institutional mechanisms you have created to ensure that you don't let go of that over a period of time. So, for example, if we have changed our accounting policies, we have changed our accounting policies in this way where it is mathematics, it is driven by formulas. Any change I need to make has to be approved by my audit committee and the board and my statutory auditors. So I cannot play around. So we have tried to create institutional mechanisms whereby, alone I can't go and make changes. The institution has to agree to those changes. And then you kind of move forward. So we are hoping that we are playing a long-term game here. And when you're playing the long-term game, there is a short-term pain which you've been going through. But hopefully in the long term, it will, bear out and give us the right results.
You're the 3rd largest private sector bank now. A lot of people say Axis Bank's ambition is to become number 2 over the next few years. That's natural progression from 3 to 2. I've even heard people say that Axis and ICICI are like PV Sindhu and Saina Nehwal at their peak. They are raring to beat each other. Do you think you can do it? Get to number 2 in the next 3-4 years?
I made the mistake that when I joined Axis Bank, I said, I had in an interview said that I've not joined Axis Bank to remain number 3. I've joined Axis Bank to take this institution to a different level. Otherwise, what is the point? I mean, I was doing quite well where I was before. So in that sense, still in that journey, still behind, very much behind ICICI. And, people...
But the gap has narrowed.
Gap has narrowed, and, I mean, people tend to define number 2, number 3 based on size. Right. In my mind, it has to be beyond that in terms of respect and how people think of you. Size is important. It's an important parameter there, but there are a lot of other parameters. I think it's a multiple-year journey because ICICI Bank is not just sitting there and will allow us to get ahead of them. They have also very smart people, smart management team, has been around for a long period of time, great reputation in the marketplace. So we have to work harder, run faster, to ensure that we not only catch up and beat them to some extent, but this journey will continue. This, if you do beat them, you have to run even harder to ensure that you stay ahead of them. So this hard work and this visioning and this sticking to what you are good at will never stop. It doesn't matter whether I'm there or someone else, or when someone else comes in. If we lose the track of what we are doing, and we don't stick to what we are doing right now and continue to do it over a long period of time, even if we become number 2, there will come a stage where we'll become number 3 or even 4.
But is that your ambition?
Oh, very clearly, we want to. Why ICICI? Why not HDFC? I know with HDFC Limited merger, they will become much bigger. But why should we stop our ambition at just becoming number 2? We do want to become number 1. And so one is number 1 at the bank level. The immediate step could be you become number 1 in some businesses. And then gradually, slowly, aim for becoming number 1 overall. But it's a long journey, as I said. And it is not easy. But as we have put our might behind some businesses, as we have looked at what we can do, there are businesses where we have become number 2. There are businesses where we are giving tough competition to HDFC and ICICI. And my only push internally is that ambition is the one which will carry us forward and carry us through. So we have to have that ambition and believe that we can do it. And that's what we're trying.
Okay, you started this discussion by saying that the conditions are ripe for another great banking credit cycle. But when you speak to companies, do you get the same optimism? Because, if starting from the finance minister, everybody's lamenting that somehow Indian corporates are not gung-ho yet. Are you sensing that, or is something holding them back?
So, 12 to 18 months back, you were seeing investments coming through only in certain sectors of the economy. I think you're seeing the investments being talked about in a slightly wider set of industrial sectors. And obviously, India is benefiting from some of the things which I talked about earlier. But you're absolutely right that that sense of that gung-ho, feeling which media seems to be talking about, or people are saying, oh, India, great things will happen. I'm not seeing it as yet. I think the corporates are still being very careful. You are seeing a lot of investments in the form of acquisitions and acquiring market share rather than investing in greenfield. Some of this credit growth which you're seeing is coming from refinance, shift of money from international bonds and national loans to the domestic market. It's also a bit of a base effect in there. And by the way, if the deposit growth does not continue, our projections is that the credit growth could taper down in the next year. So yes, you're absolutely right that somehow that gung-ho feeling is not there. It could be driven by various factors. One is this global macro. One is that they believe they're better off consolidating rather than investing because they're getting it at prices which are cheaper. So that could be the second factor. Third factor is that as people look at some of these investments, they're also asking themselves the question that should they do it incremental or they should put up large greenfield projects. So I think Indian corporate has become a bit more careful because they've gone through a crisis.
Is that a good thing or a bad thing as a banker?
For bankers, the growth is obviously much better, it's more important, but growth of the right kind. Can't be growth for growth's sake, because if people go for growth's sake, then they will make mistakes and credits will go back. So you obviously want to back the right corporates which are going after investments with the right plan in mind, rather than just going for capturing market share. So, and I'm not saying in some sectors it's bad, in some sectors it's difficult. I think overall, almost every bank after going through this crisis has come up with their own way of assessing some of those risks. And ultimately, the risk is assessed at a group and a corporate level. It is not assessed. You look at the sector, and you might have a view on the sector. But finally, it is done at the corporate level. So you decide based on that.
Over the last few years, when this balance sheet cleaning was going on for the banks, everybody, all investors, liked banks which had a larger retail exposure. Corporate lending was a bad word. Now, as this cycle starts off, what will drive it? Because you've positioned yourself with the Citi acquisition on the consumer side as well. And of course, traditionally, you've been strong on the wholesale side. But if you look ahead into the next 5-6 years, is it going to be a big wholesale credit lending cycle, or is it largely going to be a consumer cycle?
See, end of the day, India cannot expect to grow at a certain rate, whatever GDP growth rate we're all talking about, unless the wholesale side starts growing. I mean, in the sense that private side starts investing, and so it will reflect in the wholesale credit growth also. So this tepid growth rate which you're seeing on the wholesale side, some stage has to take off or the GDP growth will get impacted. So we are very clear that we want to be one of the large wholesale players across the entire set of requirements which a corporate might have, and I think we are seen as one of a very, very credible banks in that story. Obviously, right now, a lot of the credit growth is coming from the retail side. And a lot of it is not only coming from retail, it is coming from mortgage and unsecured. So obviously the regulator is also and has expressed some worries that if you guys are so gung-ho on retail and everyone is going to remain gung-ho on retail, are we creating credit risk for the future? I think India that way, if you look at larger India, I'm saying let's talk about the semi-urban, the rural markets. There is a huge amount of consumption which is possible. Yes, a lot of people will ultimately take on loans or take on liabilities because from their perspective they want to raise their living standards. So there are possibilities there, and that should not be a problem. But when everyone starts rushing through the same door, and that is this great retail opportunity, some mistakes will happen. You have seen some of those mistakes play out in the fintech world, and you have seen some of the fintechs, I wouldn't say blow up, but kind of go through real crisis because they have given loans of a kind which did not make sense, or given loans to people they can't trace, or they did not have put collections in place, and so they're not able to collect it. I think those mistakes will happen in NBFCs and banks also, because some of the banks are not putting everything in place before they're going through it. You cannot assume mortgage is safe because I have a asset. When you really want to go and sell the asset and there are too many of those assets, the prices you get on those assets will mean that you'll make a loss. So I think people have to be careful. Some banks have been in this business for a long period of time. Some of the banks who've been in this business for a long period of time are playing on the low credit risk side. So if tomorrow the retail side was to blow up or there was a crisis there, the tail will get impacted first. The larger banks who have been in this business for a long period of time, I think will get much less impacted because firstly, they are sitting on the lower credit risk side. Secondly, I think they've put processes and procedures in place where they're taking the right kind of credit risk. So I think you have to differentiate between where this could play out.
Now, if this wholesale renting cycle is to play out, this time the competition might be different, because in the last cycle, public sector banks were not a player. They were so badly hammered with the previous mistakes of the previous cycle, they could not participate. You just kept on getting share from them. But they seem to have cleaned up their act now. The SBIs of the world are back in the game. So how important a factor will competition be with a cleaner, leaner public sector coming into play in the corporate side?
No, the public sector banks have become quite aggressive in the marketplace. And right now you named only SBI. I'm seeing 5-7 banks which have become very, very aggressive. And the way they are playing their aggression game is to give a slightly lower price. So you have seen compression of spreads or NIMs on the wholesale side of the business. You have seen regulators and some people publicly talk about the fact that are you getting paid for the risk you're taking? And that is a question we have to ask ourselves. So right now, earlier some banks were aggressive. Now they have curtailed their aggression, but some new public sector banks have entered the space. Hopefully at some stage, NIMs will become important to them. They will curtail their aggression. And that's why, for example, in case of Axis, our growth on the wholesale side has been quite tepid. Because we believe the prices we are getting is not paying for the risk and the capital we are putting behind those assets. Why should we unnecessarily take those assets on board? We have deep relationship with those corporates. At the right price, we'll do business with them. Why should I do business with them for the sake of just doing business? So, yes, they are being aggressive. And that's what I say. Are we making some mistakes today which will play out 5 to 7 years down the line? So we might say, okay, NPL might not happen. But if you also don't price the risk well, that is also a mistake. It's not only thing NPL will not happen, but you are making a mistake where you're not getting the right return on the capital. So it is a mistake in my mind.
Speaking of competition, who would you say is a bigger competitor for you? Would you say it's the public sector bank which is cleaner now? Is it a fintech? Is it the Bajaj Finances of the world? I mean, who do you see as a bigger competitor?
So competition varies depending on which business we are talking about. I think on the wholesale side, there are about 5 to 7 banks which can actually, 5 maybe, which can provide end-to-end full suite of services. On the retail side, the competitive set is much larger. And when you talk about fintech and players like that, they are coming and attacking the juiciest parts of your business because that's where you can potentially make money. Now with RBI coming in with some regulations and very rightly so, I think the fintechs are realizing that there are only 2 ways you can play this game. One is that you come through the front door, take the right license, and then get supervised and regulated by the regulator. Or if you want to play outside the room, then you can do only certain activities in a certain way. Then you become a kind of a quasi-distributor. And you become a sourcing entity for the banks who are playing inside the room. So fintechs will remain competition. They will keep looking at what are the businesses which make the maximum amount of money for the banks, and they'll keep attacking it. I think we also ignore the fact that both the government and the regulator are also creating platforms which are making it much easier for competition to go and tap any customer. Platforms like account aggregator, platforms like where, for example, RBI has gone and completely digitized Kisan credit loans and stuff of that nature. So as either the government or RBI keeps creating these platforms which make it easier and simpler for any player to come in and play on that platform, if you're not smart enough, if you're not aggressive enough, if you're not on that platform, you could potentially see your customers going to someone else. So that's second competition which we cannot ignore. Third, obviously, is the NBFCs. Bajaj is one of them, but there are others also who, over a period of time, have demonstrated that they can play this game as well as the banks. At some stage, a question would be asked when they become large enough, like in case of HDFC, whether you become part of a bank or you continue to play the game, as NBFC. RBI is very clearly imposing more and more rules and regulations on NBFCs and reducing the arbitrage between banks and NBFCs. And as this arbitrage goes away, the cost of doing business rises. And when the cost of doing business rises, then either you have to either look at your growth and see whether you can grow, or your margins will come down. But please also understand that lot of, for the banks especially, RBI is very, very focused on ensuring customer conduct is right. Very, very clear on focusing that IT infrastructure keeps pace with the growth in consumer expectations and demand. Cybersecurity has become a huge risk. And why I'm listing some of them down is to say that the amount of investment required now to play this game is also going up manifold rapidly. So when that happens, when the risks in the systems are varied, when you're seeing competition coming from fintechs and platforms and NBFCs, it tends to speak to larger players. Only larger players can manage this massive change which is happening around them. So somewhere the smaller institutions will be forced to ask themselves the question, which business do I really play in? Because I cannot play in every business. I don't have the means and the wherewithal. So I also expect intense and sharper competition in some slivers of business where the smaller institutions will try to play only that business. So competition will come from all over.
Speaking of large players, there's a new competitor coming for you, Reliance with Jio Finance. And that's not a small player. It ends up disrupting any sector it enters. How worried are you about that?
We have to be. I mean, any new player, especially a player of that nature, announces plans to look at this business seriously and come after it. And, it just doesn't act just as a finance company. They have other businesses you can feed into there, and that's why they're doing it, into the finance business. But let's understand and appreciate that it's a large market, and everyone can play in that market. The reason you will win is because you're ensuring that you are attacking the right customer, looking at... Let me step back. There are two simple parts of this equation. One is that what am I doing as an institution to ensure that when a customer thinks of, he has a need or she has a need of any kind, in their subconscious mind, you have worked with that customer or done things with that customer so that when they're looking for solving that need, they think of you as a name they want to consider. So there is a huge amount of work that is required to ensure that the customer thinks of you. Now, in case of Reliance, for example, what we have seen is that they play this game of market share and the price points at which they come and attack. Somewhere in the minds of the customer, they'll say, okay, let me think of Reliance. Because maybe they're playing at their price point. So that's one part of the journey. And I'm simplifying it, don't get me wrong. Second part of the journey is when the customer actually comes to you, what is the experience you're providing to the customer so that they say, I've had a great experience with the customer. And let me give you a very stark example. For, our mobile app today is rated 4.8 on Google Play Store. It's the highest rated app in the world today. Great. Citibank is rated, because we're acquiring that business, 4.4. But if you go and ask the Citibank customers, they're not experienced access, and they think Citibank app is a great app, which it is. 4.4 is not a bad rating, but we are better. So unless the customers experience you, the value of you getting rated at 4.8 in a mobile app is only that much, because people are not willing to experience you. So first part you have to get it right, the second part you have to get it right. Now the second part is also not simple, because when the customer comes to you, if I understand, then I've underwritten Udayan, and I understand what they will be exactly looking for. If I can surface an experience which is delight, in 3 clicks you're out, because you've got exactly what you wanted. And if I can continue that experience across our customers, I can win that journey, Reliance has to do a lot of work to win that journey.
It sounds like a challenge, Amitabh.
It's a huge challenge. Because all of us are doing it, the kind of things you have to put in place to get the first part and the second part right cannot be underestimated. I'm just very gently saying that it's not as simple as it looks.
Come on, play the game and prove it first.
Yes, absolutely. And they are, the player all of us need to worry about. But that game is not easy, is all I'm saying.
What are the chances that next year Gautam Adani follows? Usually the two come together, right?
Everyone initially starts with a super app. Tata's have one. Reliance did talk about one. I think the Adanis have launched a super app. So I think it's the first step in that journey. It's not going to stop at a super app, right? If it is a super app, then you will keep adding services to that super app, and financial services is a natural service or extension of what you'll do. So frankly, and by the way, they already, I think, have an NBFC. It will happen at some stage. And so we have to be prepared for everyone trying that. When you look at every large business group in India, they have a presence in the financial services space in some form or shape. So yes, we have to compete with them also. It's a matter of time.
Let me ask you a different question. We spoke a lot about the credit cycle. Where is the money for all this lending going to come from? Because, 17-18% is your credit growth. Your liability growth, deposit growth is 9%. At some point, the two have to converge, right? Otherwise, where is the lending money coming from? Does that worry you?
Oh, it is a worry. And frankly, if the deposit growth does not pick up, let's be very honest here, the credit growth will be a subset of deposit growth. It can't be even at the same level. Because some of the money you have to park and put it in SLR Sierra. So, unless this is solved in some form or shape, ultimately the credit growth in the system will slow down. And that's why I said, already at least we are projecting internally, our economist is projecting, I think he's here in some of the sessions, that the credit growth will come down to about 12 to 13% unless something happens on the deposit side. I think RBI is quite clear that they have certain things to do and they are following a certain path and they will continue to stick to that path. I don't expect that to change. So I'm not expecting any major impetus to come on the deposit side. So in that sense, that is one of the worries we also have, that if deposit growth does not come back, then this credit growth will get impacted because you can't rely on external borrowings to fund that deposit growth. And by the way, even if you were to rely on it, the regulator will come down very heavily on you very quickly, saying that this is not the way to grow. Because they have to watch for the risk in the banking system. And this would create a risk in the bank if you're relying on external borrowing.
We are slowly out of time now, Amitabh, but before I end, let me ask you one question. You've had a very interesting career. From Infosys BPO to HDFC Life Insurance to Axis Bank now. If somebody were to give you $1 million today and said, buy one of those three stocks, Axis or Infosys or HDFC Life, which one would you buy?
I'm in silent period.
No. Come on. You
cannot comment on any stock. And by the way, I have my head of corporate commission sitting somewhere, she's here. She will take a gun and shoot me if I say anything. Because she shot me a couple of times earlier also, and she's warned me before I entered, you will not speak. From my perspective, each of those industries have a huge runway for growth. It's a question of how well you can do in that runway. And where you are, what your context is, how you playing that game, given the deck of cards you have. And I would say, I've been lucky. If you look at all the three names, I think they all stand out in terms of what they've been able to achieve in their industries and their sectors. I would say in case of Axis, we have a lot to do because that's where I am, and that also there represents a lot of opportunities going forward. If we can execute well, I think sky is the limit, but it all depends on how well we execute. And that's why one is working very hard to ensure that we can potentially grab some of the opportunities that exist.
Well, compliments on an excellent job so far at Axis, and I wish you all the luck in your race to overhaul ICICI Bank at number 2. Thank you very much.
Thank you so much. Thanks a lot.